We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up COKE. We are on the 12-month time frame. Price action, last candle to right hand side is a bullish green candle. Current price is sitting at 657.69. So we're looking for price action, overall highs of structure, which would be green and red, nearing the numbers of 617.52. Price action, lower structures headed down towards the low of that bottom, which would be near the numbers of 4.85. And we're also going to add the midpoint right in the middle. So that will be near the area of 314.81. So let's take a look at what's happening in the market. So price action on the 12-month time frame is reading as a bullish green candle, so it's coming from the second last candle. So when the market reached that high with the third last candle spiked up to a high, second last candle came back to retest, price action, it pushed up. So it pushed up, engulfed the second and the third last candle in the market. It did also break the overall structure of that SR line. So that means we're going to see if that market's going to push up with the following bullish green candle, work that market up further, or it may just come back to retest or consolidate sideways to the high of the area of price action before pushing up further. But let's say the market is declined at the area at this high. So let's say the market comes down. If it does, what pattern can be formed? It can be identified as the third leg would be the first, the third candle will be the first leg, second leg, third leg, and it'll drop down with the bearish red candle. We'll see that double top, and if it breaks that formation of the M structure, then you're looking for the break, the retest, and for that market to head down to the zone area unless it creates the momentum. It respects the midpoint, which will be the second level highs. So that'll be near the numbers of 479.76, and then work his way back up and just consolidate within that area of second level highs and overall highest high of structure. Walking down to the 6-month time frame, so price action on the 6-month time frame is reading as a huge bullish green candle. You can see it's coming from that second and third last candle, which is identifying as spike downs to the low of the second to last candle in the market, or I should say second level highs. So it is reading as market broke through the second level highs, tag overall highs of structure, retest, and we received a push. The market pushed and broke out of the previous side. Price action body is above the previous bodies of the candle. So price action body is above the second, third, and fourth last candle, showing that the market has a chance to push up. And the price action wick is also above these other candles. So we paying attention to the break of the SR line. So as we walk down, we want to see if it retested or retest the overall highest high of that structure in yellow to see if it's going to push up further, consolidate, or identify maybe a reversal at the top and maybe dropping down. Working our way to the 3-month time frame. So price action on a 3-month time frame, still receiving that bullish green candle, still receiving the break of the market, and we can see that decline W towards the left hand side. So it could be respected as first, second, third, fourth, so double bottom. When market went through the SR line, it retested the SR line and pushed up once. So market's coming from a double bottom or a head and shoulders pattern or a triple bottom towards that low. Walking to the monthly time frame, so price action monthly time frame, bullish green candle. So we did receive the break on this monthly time frame towards that high SR line at the numbers of 617.52. Price action has a long wick up to the top, so it may be identifying some type of reversal. It may be coming to a retest or consolidation because we lost a lot of momentum. Not saying even though it can lose a lot of momentum, it can still follow with another bullish green candle. But just looking at this candle is similar to the previous candle to the left hand side, or the patterns to the left hand side. So because this candle has a long wick, it could be just a retest to the high. So for example, if it drops down, it can follow up with the first, second, third, fourth retest, and this is where we can receive the pattern for that market to come down. If the price action, the bearish candle, that's going to engulf the current price action candle and push that market down as a double top and retest, unless we see bullish green candles that keep pushing up. Walking over to the weekly time frame, so price action on the weekly time frame is reading as a bullish green candle, still spike up to the high, so we can see how long that candle spike is up to the high. So it lost a lot of momentum to that top, so it's definitely identifying that it touches previous side. As we can see, long wick up to the top, previous side, long wick up to the top, previous side as well. So 1, 2, third push. So is it going to push out? It's going to retest, or it's going to consolidate? Still walking down the time frame to see what we see. And walking down to the daily time frame, so same candle, bullish green candle, spike up to the high, lost a lot of momentum, stopped at the midpoint of that area. So just trying to figure out some structure and what's going on. So as we have the highest high of structure, and we is at 617.52, we can grab the high of that candle and we'll tag that. It will also change the color. And we're going to also add the midpoint right in the middle, so that'll be like near price. So as we walk down the time frame, the market will get a little more detail to see what's going on, because we do know that the market broke, spike up to the high, came back to retest, as we can see, because it lost momentum. So what's going on in that area continuously? So as we're on that daily time frame, let's go back to that daily time frame. We're going to also place a zone over the second to last candle in the market. So as we walk down the time frame, we can see what happened when that market did consolidate with the third, fourth, or I should say second, third, fourth, the last candles in the market within that zone. So being on the 4-hour time frame, we can see that market consolidated, created that pattern that pushed that market up. And in that 4-hour time frame, we can see that when that market did consolidate the past few days, what pattern was formed. So the market went into the zone, and we have that first, second, third, fourth. So the market pushed and broke out with the 9:30 a.m. candle retest, or I should say consolidated sideways. And we have to still wait to see what's going on. So if the market is retesting, so it could identify as, we do know it spiked up to a high, came back to retest with the price action. Now we got to wait to see if it's going to follow up. But is it going to be a bullish green candle that's going to push that market out? If so, this candle can turn to a bullish green candle, or the following one can show up and then start working its way up and engulf because you want to engulf the second last candle, identify that market's breaking up to following levels. If not, that market work its way down, so it will identify as a double top. So it'll be one spike up to the high with the second last candle, another spike up to the high or near that area with the price action candle, and it can just come down with a bearish red candle if it follows up. Walking down to the 3, consolidation. So price second is still within that third last candle of that high structure. Walking down to the 2. So if you combine the third to last candle with the fourth to last candle, this is just a giant wick that can identify itself maybe as we walk down the time frame. When you see long wicks up to the high, long wick to the low, if it's between 2 or 3, 4 candles, that's a combined candle of a doji basically. So you wait for the breakout to the upside of the fourth to last candle wick, or towards the third to last candle to the bottom of that wick. So anything within these within the top of that wick or the bottom of that wick, that'll be consolidation. So anything within that area is consolidation between the numbers of 642.23 and a high of 694.04. Okay, guys, this is Cam Jones, FX, COKE, Stark.